International Trade Finance, Funding Options for Expansion. Title: International Trade Finance, Funding Options for Expansion. Introduction. In today's globalized economy, businesses are constantly seeking opportunities to expand their operations beyond domestic borders. One crucial aspect of such expansion is securing the necessary funds to facilitate international trade. International trade finance plays a pivotal role in enabling businesses of all sizes to engage in cross-border transactions. This article explores various funding options available to businesses seeking to expand their international trade activities. 1. Bank financing. Traditional bank financing remains a popular choice for businesses looking to fund their international trade ventures. Banks offer a range of financing options, including trade loans, letters of credit, and invoice financing. Trade loans provide businesses with working capital to fund purchases of goods or services from overseas suppliers. Letters of credit act as guarantees to suppliers, assuring them that payment will be made upon the successful completion of a transaction. Invoice financing allows businesses to access funds based on the value of their outstanding invoices, providing immediate liquidity. 2. Export credit agencies, ECAs. Export credit agencies are government entities that provide financial support to businesses involved in international trade. ECAs aim to mitigate the risk associated with cross-border transactions by offering credit insurance, guarantees, and loans. These agencies often facilitate access to funding for businesses that might otherwise struggle to obtain financing due to perceived risks of trading. In certain countries, ECAs can play a vital role in assisting businesses to expand their international operations by reducing financial barriers and fostering trade. By leveraging the buyer's established relationships with financial institutions, suppliers can access financing at a lower cost based on the buyer's creditworthiness. This approach enhances the financial stability of suppliers, enabling them to fulfill orders and expand their production capacity. Supply chain financing can be an effective way for businesses to optimize their working capital, reduce operational risks, and stimulate growth in international trade. 4. Trade finance platforms. In recent years, digital trade finance platforms have emerged as a viable alternative to traditional funding sources. These platforms provide businesses with streamlined access to financing options, automating document processing and reducing transaction costs. Trade finance platforms often employ technologies such as blockchain to enhance transparency, security, and efficiency in cross-border transactions. By connecting businesses, financiers, and service providers, these platforms empower businesses to access a wide range of funding options tailored to their specific needs. 5. Development finance institutions. Development finance institutions, DFIs, are specialized financial institutions that focus on promoting economic growth and development in emerging markets. DFIs typically offer a range of financial products, including loans, equity investments, and guarantees. These institutions often prioritize funding projects that have a positive developmental impact, such as those involving infrastructure development or sustainable agriculture. For businesses expanding their international trade activities in emerging markets, DFIs can provide valuable financial support and technical assistance. 6. Peer-to-peer lending. Peer-to-peer lending platforms enable businesses to borrow directly from individual investors, bypassing traditional financial intermediaries. Peer-to-peer lending offers an alternative funding source particularly for small and medium-sized enterprises, SMEs, that may face challenges accessing traditional bank financing. These platforms provide an online marketplace where businesses can present funding requirements, and investors can choose to finance specific projects. Peer-to-peer lending offers flexibility, speed, and access to a broader pool of potential investors, facilitating international trade expansion. 7. Venture capital and private equity. Venture capital and private equity firms are another avenue for businesses seeking funding for international trade expansion. These firms specialize in investing in high-growth potential businesses and often provide more substantial amounts of capital compared to traditional financing options. These investors typically take an equity stake in the business and expect a return on their investment through growth and eventual sale or exit. 8. Government grants and subsidies. Governments around the world often offer grants and subsidies to businesses engaged in international trade. These financial incentives are aimed at promoting job creation, economic growth, and competitiveness in global markets. Businesses can explore opportunities to access government grants and subsidies tailored to their industry, location, and export activities. Such funding can provide a significant boost to businesses' expansion plans and help cover costs associated with market research, market entry, product development, and marketing. 9. Crowdfunding. Crowdfunding has gained popularity as an innovative funding option for businesses across various sectors. Through crowdfunding platforms, businesses can reach out to a wide range of individuals or groups who are willing to invest in or contribute to their international trade endeavors. Crowdfunding campaigns typically involve offering rewards, equity, debt, or donations in exchange for financial backing. This approach not only provides access to funds but also serves as a marketing tool, allowing businesses to showcase their products or services to a wider audience. 10. Trade credit and supplier financing. Trade credit and supplier financing can be effective funding options for businesses engaged in international trade. Trade credit involves negotiating payment terms with suppliers, allowing businesses to defer payment until a later date. This extension of credit improves cash flow and provides businesses with the necessary funds to secure goods or services for international trade without immediate upfront payment. Supplier financing, on the other hand, involves the supplier offering financing options directly to the buyer, allowing them to access funds for purchases. These arrangements can support businesses' expansion by improving cash flow and enabling more significant purchases or orders. 11. Export factoring. Export factoring is a financing option specifically designed for businesses involved in international trade. It involves selling accounts receivable to a factoring company at a discount in exchange or immediate cash. Export factoring provides businesses with working capital that they can use to finance operations or invest in growth opportunities. This option helps mitigate the risk of non-payment from overseas customers and ensures cash flow stability for international trade activities. 12. Trade insurance. Trade insurance provides businesses with protection against the risk of non-payment or other trade-related losses. Insurance policies can be tailored to cover specific types of transactions, such as export or import contracts, ensuring that businesses are financially safeguarded in case of unforeseen events. Trade insurance can give businesses the confidence to expand their international trade activities by mitigating the risks associated with cross-border transactions and providing peace of mind. 13. Angel investors. Angel investors are high net worth individuals who provide funding to businesses in exchange for equity or convertible debt. These investors often offer not only financial support but also valuable expertise, mentorship, and industry connections. For businesses looking to expand their international trade operations, angel investors can provide the necessary capital infusion and guidance to navigate. 8. The complexities of global markets. Collaborating with angel investors can be a mutually beneficial relationship that fuels growth and opens doors to new opportunities.